Okay. Audio good, video good. Can you see me? We good? Should have the video feed live. Yep. If not, I'll refresh. Let's see. What about now? See if that works. Any luck? Okay. Audio good, video good. Let's refresh just to double check. Okay. Now we're in business. Okay, cool. Um, so usually how like we start things off, just kind of go over what I say is like the state of the market. So just major developments since we last got together, and really just you know like and any type of action we're seeing, like, and kind of how it influences our trade setups and just like option pricing and whatever. And honestly, it's pretty amazing. Last couple of weeks, actually last couple of months, to be honest. The last time we met was right around the time when we just like tested the 8 and broke below the 20, and it kind of complicated things, but only for like a very brief instant. Um, you know, when we started to break out in October and started to move higher in November, it really set up like a lot of like trending patterns, a lot of like lower volatility, kind of like lower volatility, tighter range, smaller move type setups. Like that was really our focus. And then when like the spider, so like during that move, we used the 8 EMA and the 20 on the spiders. It's kind of like a line in the sand for like our bull bear like bias. So like for a while it was like 80-75% bullish trades to bearish trades. And then the last time we got together was really right when like we started to see some signs of selling. And that's what we were talking about was like the kind of like the technical setup. Hey, what's happening, hon? Welcome. Um, so the video, just give me a thumbs up. Audio and video working okay for you, hon? Just want to make sure. Okay, perfect. So basically, when we got together last time, we were kind of like going over like the setup, because we obviously at the time we still had all this uncertainty around the December 15th trade deadline. We had a great run off the October low, and some of like our momentum levels were starting to crack. So we were talking about how like when like a trending trade cracks, that you're looking for an expansion in volatility, right? And we really wanted to like maybe like even out like our mix of bullish and bearish trades. So what happened was is that we basically had like a perfect V bottom. I mean, it was kind of like straight down and then straight back up, basically culminating with like the jobs report, which was 2 weeks ago. So two Fridays ago, we had the jobs report, and that basically completed the reversal. So, I mean, like since we last met, actually quite a bit's happened. Not only did we have like that fake breakdown and reversal, but we also had the signing of the trade deal, right? So, we are still, I guess, within that trend. I mean, we're starting to accelerate out of it a little bit, which makes me like slightly more cautious. But we're above all of like these momentum indicators. We're above the 8, we're above the 20. We hit a new 52-week high today. Same thing with the Qs, basically the exact same setup. And we're back in that environment where, trying not to you're trying not to like talk yourself out of the trade setups, right? Like you're trying to take what the market's giving and not trying to like press your own opinions onto the tape, right? Like, yes, like, do I think that we've had kind of like a crazy run and a lot of like the news is kind of like priced, like good news is priced in, yes. But at the same time, we're still not getting pullbacks. I mean, we're still powering higher. We're still putting in higher highs, higher lows. We're above all the momentum moving averages, and you're back looking for like those trending trades. You're looking for bullish breakouts. You're looking for bullish reversals. You're looking for continuation patterns, right? And that's why. So for like the options and play trade ideas, like I wanted to still have like a mix of some bearish ideas just in case we do get a pullback, or maybe we get maybe like one-off headlines in certain areas because there's some sectors that aren't acting great. Still kind of lagging a bit, but really, like as it stands, we are acting extremely bullish, and we're heading into what's typically a pretty bullish time of the year, like the Santa Claus rally, right? Like the period between Christmas and New Year's, historically, is one of like the strongest stretches of the year. So it's pretty consistent. So we're acting great. Things are still maybe we're a little bit overcooked in the sense that we're kind of starting to accelerate away from that 8 EMA, which is pretty important, but like not trying to like press your opinions onto the tape. Like if I just had to like step back and take a look, I'd say like things still look bullish, and we're heading into kind of like a bullish seasonality window here. So still going to be looking for bullish trades. So like breakouts, again, continuations. So like if we're in a trend, looking for continuations, like that Lockheed Martin trade is like a continuation of a trend, right? Breakouts or even like bullish reversals. So, maybe some stocks that are, have rolled over looking for like reversal, like a snapback or something along those lines. So that's really like what my focus is on from like a trade perspective. And really like that. The reason why is because that's what the tape's given, right? Like the tape is in like a bullish trend. So we're kind of like back into that period where you want like a higher mix of bullish trade ideas. That being said, it still doesn't hurt to have like those hedges in place. And obviously it's always frustrating when like you get like this dip here, hedges come into play, and you're like, oh, I'm so glad I have the hedges. And then like 3 days later, like the hedge is completely out of the money again, and you're like, why do I have this hedge in place, right? So it's kind of annoying, but the hedges, I like having those hedges there because you just don't know. Sometimes things are unpredictable. Like tweets can come out of nowhere, and sometimes it goes from like everything's great and everything is coming up roses to like one day we're down like 4, 5, 600 points, and you're like, oh man, I really wish we had some sort of downside bets or downside hedges in place. So right now, the plan with like the SPY and the QQQ hedges, because we're kind of like a month out. I'm thinking about rolling those probably out to like February, even like March at this point. I don't really like when the hedges get within like 2 months until expiration. So right now the expiration's January 17th, and I don't really like when they get within 2 months unless they're like at the money or in the money. That's a different story. But when they're out of the money, I don't really like because then theta, like the theta premium burn is really going to be a lot higher, especially if they're out of the money and volatility is really like collapsed, which it kind of has. Which we'll go over the VIX in a second. So, but just keep an eye out. Like I'm thinking, probably minimum February, possibly even March, because right now, like the cost of protection is pretty low because the VIX is. So we'll just might as well just talk about it. The VIX is so low. It broke below 12 actually briefly today. So the VIX is just so low that if you're looking for protection, now is actually a pretty good time. Like they always say, like you want to buy insurance not when you need it. It's like when everything's going well is when you want to get it. So right now, if you're looking at, a lot of people I'm sure are probably sitting on like massive year-to-date gains and some things. So if you're looking for, um, if you're looking for protections, it's not a bad time, especially after the run we've had and the fact that the VIX is so low. It means that the cost of financing that hedge is going to be lower. But yeah, I mean the VIX. I mean, like this tells you what you need to know right here. I mean, the VIX broke below 12 very briefly, so you can see the overall volatility that we're in. The environment's still really quiet. Um, so the Qs basically the same thing as the spiders. Russell, okay, so the IWM a little bit different. It's been lagging pretty much all year, and the swing trade. So like the Russell swing trade was opened because of this. So really nice technical breakout, right? Had like a great move through that 160 range at the end of November, and pretty good participation, good volume, held above it. Had a little bit of a head fake earlier in December, but now it's back above. And what you'll notice is the 8 EMA. So like I said, like that momentum moving average, kind of like riding higher along with it. And now the 20, which is also kind of like a momentum moving average. So the 20 is now crossed above that really critical 160 level, which is a great sign too. So um, IWM breaking out, and now like the two key momentum moving averages in my book are both above that 160 resistance level. So like that yearly resistance level. So this breakout really should start to take shape, especially because now you kind of have like a couple support levels that should provide like a higher base on it. And as the IWM starts to build, you're looking really, I mean, like mid 70s. I mean, like low to mid 70s. So just from like a measured moves perspective, like when the trade was initiated, 2 months, I thought like minimum, just based off like the average trading range on the IWM, like a month to month basis. So averages, ETFs, they're not going to move as fast as like an individual stock. So didn't really want to like be too cute with this and try to just go out through January. So like February, I thought was a good time frame, especially based off the average move like on a monthly basis. So still looking at you're still looking at like pretty good breakout and overall like low to mid 170s. It's still gonna be the target, like a retest of that 2018 high. But so far so good. And if we keep grinding, like I would expect the IWM to really start to accelerate, especially as this like distance itself from this 160 range. Any questions? So you can see I kind of get like worked up and start talking and but like if you guys have any questions or comments, like I mean just fire them off. I mean um, overall like again like my like I try to like separate like my opinions from like the action because my opinion says like we've had such an amazing run, we have to pull back, but at the same time like the technicals and like all of like the signs aren't really saying that. Yeah, of course. What's up? It's a question, huh? Um, okay. Yeah, okay. So you know what? Let's we can go over it. Um, so Bowen, I mean, I do occasionally uncover the spreads. Um, I don't normally uncover it when it works in my favor. It's more so when it moves like against me. So in the case of Boeing, um, I understand like your thinking behind it in the sense that like you think that it could actually so like I like to do spreads sometimes getting into position, especially when the contracts are more expensive, because like it kind of lowers your overall net debit, which is I'm guessing kind of what you what was maybe the rationale to do the spread in the first place. Yeah. So, um, you could uncover it, but then you're changing kind of like the risk to reward dynamic of the trade. So you're adding more risk to it, and get. I mean, like the downside scenario. I mean, like if it does start to break down, like that's going to be a higher reward, but also changes the risk pretty materially. So instead of like uncovering it, sometimes what I prefer to do is just buy something like further out of the money. So, instead of like uncovering that spread, maybe what I would do is like go down and look at maybe like the 320 puts instead, or like 315. So basically, like the thinking behind that is, um, I don't really want to adjust the risk of like the trade I'm sitting in, but in case like it does end up really starting to break down, um, I want to have something where like maybe like my upside isn't capped, so I might go like further out of the money. So instead of like uncovering the 325 put, I might go down and like look at opening like a 320 put. So that way, if it does start to break down, like that 320 put should give you some more upside to the trade. Does that make sense? Yeah. Most of the time, yeah. Most of the time, like I prefer not to uncover like a spread if it's moving in my favor. It's normally if it moves against me and like I can buy back the short part of the spread for like less. Is normally when I like to uncover them. Yeah, cool. Good question. Um, so oil starting to go too. So slow and steady, starting to build. And again, like this is why you're starting to like put some energy bullish trades on because the commodity really starting to look like it could start to take off a bit here. Let's put the lines. Get my lines all messed up. So you can see. So this is what I was. So this is what I've been looking at, and you can see that oil hasn't really been screaming higher, but starting to move higher, starting to break like this year-to-date pennant, and that's why like Halliburton was a bullish swing, right? That's starting to work. Concho bullish swing. That's the drawings on here. So Concho bullish swing. That's starting to work. XCC starting to go right. So that's why like I don't really like trading oil, but I like keeping an eye on it because obviously it's going to like impact any energy trade and it's going to like form any like biases I have with those energy trades. But I still think like the January time frame is pretty good. Seeing some like option positioning in energy in like the January time frame. So I think that's plenty of time. I like that there's been a lot of positioning just like across the board and like a ton of different a ton of different names and energy out through January. Um, and that's I don't really I don't follow like the unusual option activity very closely, like for like individual names like on a day to day basis. But one of like the things actually which I'm going to talk about in a couple of minutes. It's like one of like the things I like with unusual option activity is when I see like repeated positioning within a sector. So that just kind of makes me think that people are participating, they're putting money to work in that area. So it's not necessarily just buying like ExxonMobil calls every single day. Like I want to see like ExxonMobil calls one day, Chevron the next day, EOG, Rig, Devon, Halliburton, right? Like you see like calls bought all in one sector in like a similar time frame. Like that to me is interesting, more so than just like a big block, say like 5,000 ExxonMobil calls. That's like what like to me, like I'm like, oh, it's maybe worth noting, but like would I necessarily trade off of it? Probably not. But like if I see repeated positioning in multiple different names within a sector, kind of like the same time frame, That to me really kind of like puts it on my radar. I'm like, okay, maybe I should start taking notice. But the energy positioning kind of coincides with like oil starting to creep higher, and also like the Saudi Aramco IPO too. And then just quickly, gold, silver, just still kind of sideways. Gold, GLD's got to get through 140.50, got to get through that 100 day, then maybe can turn the corner. And then silver, still kind of like a same setup. It's kind of needs to get through like the 1625, 1630 area, get back to that 100 day, and then it can turn the corner. But right now the metals just they're not really in play. Still trying to turn that corner after like what had been like a really nice stretch. They're pulling back the last few months, just been kind of choppy. So sticking with those ideas, but there's not really anything to do with them at the moment. They need to like put together a little bit more upsides to really start to like think trigger some momentum levels. All right. Any questions? Whew. Getting a little sweat on over here. Things fired up. Okay. So we'll jump into like the lesson for today, which actually it's because it's like so today's our last coaching session of the year. Just because I mean like the next time we get together is going to be like the beginning of January. So this is our last one for the year. So I thought it was like kind of like a good opportunity, maybe just to like go back over some of just like quickly. I'm not going to spend too much time on everyone because they're up there on the website. You can go back and more in depth, but just kind of like some of like the highlights of what we covered this year. Like a good year in review. So again, just like some of the key topics, and you can see from like trading goals to trending trades, which I already talked about today. But all sorts of stuff. We covered all sorts of option trading ideas, and just as the year draws to an end, thought it was a great time to just go over some of those again. So in January last year, daily goals and stop losses. So this one I think well all these are super important, but this one I think kind of like high up the list. So I get asked this question a lot from people that are maybe starting out or maybe just like just looking for like how I operate or how I set my daily goals. And what I like to say is, and what I like my advice is, um, daily trading goals. So for those people that are like active on a day-to-day basis, I like to take my top 3 to 5 sessions from the previous month and then average those together, and that's going to be like my daily profit target. Okay, so once I hit that, I'll size down. I mean, I won't necessarily stop trading. I'll size down because I don't really want to put that money at risk. Like that's like my goal for the day. Once I hit that goal, then I'll either maybe in some cases I might shut it down, but a lot of times what I'll do is just like really cut my size back and just be a little bit more risk averse because I hit the goal, don't really want to risk giving money back, right? But it's basically what I like to do is like the top 3 to 5 sessions from the previous month, average those together. That's my daily trading goal, right? And the thing that's nice about that is it's going to be dynamic. So as your days, as your up days get bigger, like so then will your trading goals, right? So it's like a dynamic way to kind of like keep gradually improving and keep like increasing like your goals, right? Kind of like it's like increasing your goals within yourself, not just like setting some arbitrary number. If you want to be more aggressive, then you could go back, take the top session from the last 3 to 5 months. So obviously, like that's going to be a higher target. Um, but that's if you wanted to be more aggressive with your daily trading goal. For your daily stop loss, kind of like the same idea. So you're taking like your that the same 3 to 5 positive sessions or top sessions from the last month. Okay, averaging those together. So basically, like your daily trading goal, right? So your daily trading goal And what you do is like I like to take like a third or half of that daily trading goal and set that as my stop loss. Okay, so usually not more than a half. Like that's like half is probably like the highest I would go. And basically, this all just comes down to money management, right? So if if say like you're only like a 50 like up days to down days, then if like your up days are 2 to 3 times risk reward wise, like your down days, then at the end of the month you're going to be coming out ahead, right? So that's why like a lot of this comes down to money management, and these are like kind of like the money management techniques I use. Um, some people less active, and then for those people that maybe don't trade as much on a day to day basis, maybe they're only more like weekly, maybe a couple trades a week, maybe a couple trades a month. What I like to say is maybe use like 1 to 2% of your account value or assets under management. All right. Unusual options activity. So this is what I kind of referenced a little bit before. This we covered in March, and um, it's the paper trail of the smart money. Okay, like when you see like those big blocks going off, it kind of it's nice because it kind of tells you what the smart money positioning is, or where they're positioning versus like you can't always tell on like on an equity because you don't necessarily get like those big blocks. I mean, it could be like spread out. Um, Options though, they're kind of up there for everybody to see. You can kind of see when you see like 5,000 calls bought. It has that paper trail. Everybody can see it, and um, some people I know some options traders like that's like their thing. They focus like exclusively on that. I don't. It's really not for me. But there are like a few scenarios where I like having that as like a reference, or I like when I see unusual options activity, and like those three scenarios for me when I really like when I really get interested with that unusual options activity, so like those big blocks of calls, those big blocks of puts, it's when a stock is working on like a really critical technical inflection point. So like a stock is just about to break like say like a 3 month resistance range, and you see calls just starting to get lit up, right? Like big blocks of calls are getting purchased right as the stock is about to break 3 month resistance. Like that to me is a great sign of trader participation. Okay, so like that'll give me greater confidence in that breakout setup. Okay. Also, when you see like unusual option activity, so like big blocks of big option positioning right ahead of events. So right now we're kind of through earnings season, so you know there's not a lot of like earnings positioning, but you have a lot of biotech events. So when I see like those bio positioning, so like the big calls, big puts, it can kind of like tip the hand to like what like the smart money's doing, maybe what some of like those bio funds are doing. It doesn't necessarily mean I won't go the opposite way. It just, I kind of like to see what the positioning is. Maybe it'll like influence like the setups, like the strategy a little bit. So maybe instead of being like 75 to 25% bullish to bearish, maybe I'll be like more 50-50 along those lines. Okay. And then like the last time I like unusual options activity is when I see that those repeated directional blocks getting purchased in like a same sector, kind of same time frame. So what I was saying with energy, right? See like repeated bullish call buying in like multiple different names in the energy sector. That's what you've been seeing over like the last 2 weeks. So like that to me, it's like a really nice sign that maybe money's starting to rotate into that sector. A lot of people are participating, so probably worth keeping an eye on. Right? So again, if you guys have any questions while we're going along here, it's just there's a bunch of slides to go through. So just kind of like keep going. If you have questions, just fire them off. April, we went over trading the open with options, and frankly, I'd say that on any given day, most of the mistakes, or if I do make mistakes, it tends to happen during the first 10 to 15 minutes of the day. And that's really because option trading is a little bit different than like equity trading. That's the spreads can really be a lot wider. The liquidity can be really poor. And like when you are in contracts that are maybe like only trading for like a dollar, right? And the spreads are 50 cents by $1.50. I mean, it can just make like trading early kind of treacherous. Okay, so I kind of have like a rule. So if I'm initiating or closing swing trades, what I like to do is wait like 10, 20, 25 minutes after the open. And I really only like to use limit orders and like kind of like start at the bid, or if I'm trying to like buy or start at the offer, I'm trying to sell. So just kind of being patient, waiting for like the bid ask to tighten, waiting for like the liquidity to hit. So that's if I'm getting in like swing trades, because by nature like those aren't pressing from like a time perspective. If I'm doing like a day trade, so something that like I'm planning on getting in after the open and exiting before the close, so not holding overnight, then I might be more aggressive. So I might get in like prior to like those first 10, 15, 20-minute window, but I still try to refrain from paying the offer or hitting the bid. So I'm still trying to use limit orders in those cases. Um, Now, catalyst trades, so like earnings trades, a little bit different story, because the way catalyst trades work is that obviously like the event is going to play out either after the close that day or before the open the following day. So getting in immediately off the open, it's not really a priority, because like the news isn't going to come out until after the close anyway, right? So I still try to be patient with those. So like waiting like first 15, 20 minutes. If it's like a strangle or a straddle, so like a multi-directional trade, then I wait until later in the afternoon. So typically like the last hour and a half to hour of the day is when I put on like those strangle, straddle, volatility strategies. Um, and then when closing catalyst trades, so if I'm in an earnings trade, I still again, like wait that first 10 to 15 minutes, because that's when the news is being digested. So you could get like a pretty big reaction the first 10 to 15 minutes. So if you sell like on the initial open, you might miss out on some of like the follow through as that news gets digested when the volume hits. The only time like I'll break this rule is if the trade is capped. So like for Han, like if you were in those put spreads and like Boeing opened at like 315, then basically like your trade, the potential of your trade is capped. So it wouldn't really make any difference if I waited until like 10 o'clock or 11 o'clock or noon, because like the potential of my trade, uh, it's capped. Like I can only make 5 points in that case, right? The put spread is only 5 points wide, so you can only make 5 points. Whereas if it bounces, then you could risk giving back some money. So like in that case, if I'm in like a spread and my trade is capped, then I probably get out early. So like earlier off the open. But you still got to be cautious because the spreads are still wide. All right, so trending trade, we'll just go through quickly, because a lot of what I talked about earlier was trending trades, but really like the main thing to take away from trending trades is that they tend to get kind of one-sided, right? Like trending patterns arise because of consistent market performance, consistent stock performance, consistent earnings performance, and like the main defining characteristic of those trending patterns is that the volatility tends to be lower. Okay, so when you're in like a trending pattern, it's there's more suited to swing trades, and we will see like probably if we continue on the path that we're on, we're probably going to see a lot of stocks enter earnings season in January in very aggressive uptrends. And the problem with that is that earnings on stocks that are in very well defined trends tend to be more of like a sell the news, or sell the premium event, because the implied volatility will often be elevated still, but overall, like stocks don't tend to usually have big moves out of like really aggressive trends or really tight trends. So it makes it tougher from an earnings trading perspective, but trending patterns like they're better for swings. And again, what I'm looking at is like continuation of those trends, reversals into the trends, or maybe like reversion back to the trends. So like if things like kind of distance themselves from the top of the trend, I'm looking for a break back into the trend, or if they break down, I'm looking like reversion back to the trend. But basically, long story short, you're not targeting volatility strategies on stocks that are in really aggressive trends because the overall volatility tends to remain low. This is what we first covered this in May, but in reality, like this is something that's been kind of in play all year. All right, sympathy trades. So another key idea. This came up in July, but I talk about this all the time. And sympathy trade, it's really about spotting like closely correlated stocks, right? So correlation very quickly measures how close two stocks move relative to one to another, move relative one to another. So perfectly correlated. So say like one stock is up $1, the other stock moves exactly along with it. So like that would be 1.0. So that's a perfect correlation. They move one to one perfectly. If they move perfectly opposite, so maybe you have like an inverse, so like say you have like the XLE and then like the inverse energy, right? So like a bear energy, like those would be negative correlation. So perfectly opposite would be -1. All right. Now sympathy trades, like they kind of come about more so because we've had like a lot of weekly options become available. And a lot of like the sympathy trades for me revolve around earnings. So really like the sympathy trade is designed kind of to like skirt the implied volatility for catalysts. And you'll see this like I talk about it with like the banks and like the retail and maybe some industrials. Basically anywhere where like say like Citigroup reports, then Bank of America isn't scheduled to report until the following week, right? So Citigroup's options are going to have the earnings catalyst, whereas Bank of America's options won't because Bank of America doesn't report to the following week. So in that case, you can do a sympathy trade on Bank of America because the options, relatively speaking, are priced lower. But because the two stocks are very closely correlated, Bank of America should react to Citigroup's numbers. So you basically get the catalyst but at like a lower price point on the option. So that's the main goal of the sympathy trade. Boxing. Wish I would have woken up a little bit earlier today because I could have boxed some wave at a much lower price. But anyway, boxing. I mean, this is gonna revolve. This is gonna be for those of you that trade equities as well as options. So if you're only option focused or if you only trade options, like this isn't gonna really suit you. But for those that do trade both, this is like really just like a great way to like be able to like manage risk better. And because options only trade between 9:30 and 4, uh, you feel like you tend to miss out on a lot of like the movement overnight, or maybe you miss out on the potential overnight. And what happens is like you'll see like a stock maybe up a ton after earnings or maybe down a ton after earnings, and you're sitting there sweating because maybe you have a position on, and like there's nothing you can really do about it. Well, boxing basically manages that risk by you're basically like netting the position out, or maybe like reducing like the risk in that position by buying stock if it's like a put or selling stock if it's like a call against that option position. So for every one call, if you sell 100 shares, then that position, like a net basis, is basically flat, right? So if you have like Apple, like say like a 250 call, Apple's trading at 260, you sell 100 shares at 260, then basically your trade is capped, you flattened it out, and now it's the equivalent of like a call spread. And basically like the same logic, but with like a put. And this is just really, it's like a great way to manage risk and kind of prevent those overnight reversals. So, especially like if you trade a lot of earnings, you trade a lot of catalysts, and you see like some really big moves after hours. So this is just a great way to like kind of lock in those trades and not allow that stock to potentially reverse and see like your option trade get wiped out by the time it opens the following morning. The one key thing to remember here, though, is that this is only for standard calls and standard puts, because if you have spreads or maybe complex strategies like flies or maybe like calendar spreads. You can't box because it's going to change the risk parameter of that trade. So it's unfortunate. It's annoying sometimes, but that's just how it goes. Because then you're basically going to be like, instead of if you sell short 100 shares and you have a spread and the stock keeps going, then you're basically like you're basically end up being like short the equivalent of like 100 shares, and that just kind of completely changes the whole dynamic of that trade. So it's really important. Boxing is really only going to be an option if you have just standard calls, standard puts. All right. Tips for trading weeklies. I think this is the last one. So this one we just covered in October, but everybody. I feel like everybody that trades options probably gravitates towards weeklies in some capacity, and the pros being that you're not paying for all that extra time and you get closer to the money contracts, which means those contracts have higher delta, so they're more sensitive to changes in the price of the stock, right? So a little bit better for day trading. Cons, one of the major cons is that because you have less time value, any move in the opposite direction is really going to take like a serious toll. So it's not uncommon to lose 100% if you're trading weeklies and you see like a headline hit and thing moves sharply against you. It's not uncommon to see like the weeklies lose 80, 90, 100% of the premium very, very, very quick. So for me, I like trading weeklies for day trades because it basically in after the open, out before the close. That really short term oriented style just gives a better shot to manage the stock and that data risk, right? And because the options have a higher delta, then they're going to be more sensitive to movement in the stock, so you get more bang for your buck for day trades. Also, I like weeklies for catalyst trades because one of like the main ideas around a catalyst trade is that you're going to try to get a big move, or you want to get a big move. So weeklies, if you have a pretty high conviction that the stock is going to move immediately, then it may not be necessary to pay for all that extra time because if you have if you open like a bullish call on Netflix earnings, odds are like it could be up 20 points or down 20 points. So like it might not be worth it to pay for an extra 2 weeks if the stock gets absolutely crushed because odds are it might not bounce back. So paying for all that extra time might not be worth it. And then also those late in the week lotto trades. Sometimes those things are the most fun. They're ultra low debit but ultra high risk. But you're not paying for much time value. And if you get maybe a headline or maybe like when the overall market's volatile, so like when we were in those like October or August, we had those 2, 3, 400 point swings on a day-to-day basis. Like late in the week, Thursday, Friday, you can get some like really low debit contracts and potentially catch like a big move. So low risk, high reward type scenarios. So like those like late in the week, like Thursday, Friday lottos. Like those are my favorites, right? Or like tweets, right? Trump tweets, get some big moves. Yeah, so that's it. Any questions? We covered a lot, but these are ideas we went over like throughout the year. If you want to go back and maybe like explore any of these in depth a little bit further, I have like the months up there, so kind of like just you can go back and just sort by the months and like that. Those should be those should be pretty self-explanatory. But yeah, like I kind of like summarize those because like those were some of like the main ideas, some of like the key ideas, um, and I want to just as we go back and review the year, like these are some good ideas to kind of talk about again. Okay. Um, so earnings. This is actually like the last week of earnings for 2019 because there's actually not There's not a single company scheduled to report next week, and the following week there's nothing in December. So after Friday, we actually won't have any earnings on the docket until the 2nd of January. So this week, you have a couple big names. We have Nike, FedEx, and Micron. And um, Micron, it's just up so much so quickly. It's kind of challenging. I really wish it would have kind of like paused maybe around 150, not 150, around 50 a little bit longer, but it's just kind of running and running and running. And as much as like I've loved trading this in the past, I don't like when things are like kind of parabolic into earnings. So I'm definitely going to be watching it. I don't know if I'm going to be trading it. It's one of the big names this week. Maybe if things kind of cool down before it reports, maybe I'll take a shot. Nike, it's not parabolic, but it's also up quite a bit in like a short period. I think Nike, it looks pretty good. Last quarter was pretty good. Lululemon's numbers were pretty good. I'm definitely bullish biased, but at the same time, options are a little bit on the high side. And if I did anything with this, I'm thinking maybe like sell near term premium to finance like a maybe like a trade through the holiday. Thinking that if the number's good, maybe it keeps grinding higher, especially in like a strong tape. But that's a little bit later in the week, so we can kind of wait and see how that plays out. But that's what I'm thinking with Nike. And then FedEx, I was on the fence with. I'm still kind of on the fence. I don't know. I mean, last quarter had a huge move. The options were only pricing in about half of what it moved last quarter. So from a pricing perspective, not bad. From a technical perspective, I don't really know what to do with it. So I'm a little bit more undecided. But that could be a big one. I don't really know. I don't have a lot of conviction with it. But from a pricing perspective, one of the more interesting setups. Um, I'm kind of undecided though. But that'll be one that keep an eye on it. It reports tomorrow after the close. I didn't write up the trade idea for tonight, but might put on something during the day. So just keep an eye out on that one. So that's kind of like those are like some of like the high profile ones this week, um, because the bio environment has been so spectacular recently. I just want to like go over like a few more ideas because we won't meet now until beginning of January. So just from now until then, like when we meet next time, I'm gonna do like a J.P. Morgan prep pack because the J.P. Morgan Healthcare Conference is routinely some of like the best action in healthcare for the year. So I'll go over what I'm watching. I'll go over some of like the option setups for that J.P. Morgan Healthcare Conference. But we don't have to do that right now because we're going to meet ahead of it in January. But just between now and the beginning of January, there's still like, by my count, 8 catalysts. So 8 pretty big catalysts in biotech. So definitely some potential. First things first, Sangamo. So this obviously didn't really play out the way I'd hoped after the ASH conference. Had a really nice run into it. Had a miserable move after it, and they actually have their it's called the Research R&D Day. That's actually tomorrow. So this is definitely something that could be in play tomorrow. That's why like the call remained open is because it's probably more of a long shot now, but you know a long shot's better than no shot. That's tomorrow. So the Sangamo Research R&D Day, PTI. So this is like a current trade, right? I mean, like those options are a ton of volume today. And this one, I still think it's all like a risk reward trade. The January options, so it's a 430 stock in the just to give you an idea, the four strike straddle, right? This stock is 430. The four strike straddle is pricing in like almost 325 to 350. So they're pricing in about a 75% move on this data. From a risk to reward perspective, I think it's massively skewed to the bull side. If this data is positive, it would not surprise me to see this thing up 2, 3, 400%. So yes, of course it's risky. Every biotech, when it reports data, has risk involved, and this one is no different. But from like a purely risk reward perspective, like this really still seems like, even though it's had like a monster run, I still think it could have like a lot on top of it if the data is good. So like that's one the company said before the end of the year. So either this week, next week, or I mean, basically that's it. So like over the next 2 weeks, PTI is going to report data, and I mean the options are still pricing in a huge, huge, huge move. Um, Speaking of huge moves, Axum. So today was the depression data. That was a big catalyst, probably the biggest catalyst. But they actually still have another phase 3 set to read out. Um, so they have a migraine release that's supposed to come out by the end of this year, and that probably not going to move the stock nearly as much as it moved today. But I've read that it still could be worth like maybe like 10%, maybe 10 to 12%. So yes, the biggest catalyst played out in Axum, but it actually still has like another catalyst coming up. I'm waiting for them to open up higher strikes. I'd like to see a little bit of a consolidation, but right now they don't have any strikes offered above 70. But this is definitely one that still has some data due out. Another one, Amarin. So people are speculating that there could be a patent resolution coming on this one before the end of the year. And from what I've read, could have anywhere from like 2 to 4 points upside off that patent resolution. Had kind of a weird reaction to like the FDA approval, that early FDA approval today. But like from like a overall trade perspective, I mean, it still seems like the path of least resistance is higher. The news still seems to be good, and that February time frame, I still feel like the options are a little bit underpriced, just based off the chart, based off the news, based off the potential. So this is one that if you get that patent resolution, you could see like another like 2 to 4 points upside on it. Options aren't really priced in for that either. Biohaven. So this one you want to keep on your radar. They're supposed to have one phase 3 migraine. So they have a couple trials. So they have one migraine that's supposed to read out before the end of the year. So phase like 2, 3, which is like a registrational, and then early January, but it could potentially be at the end of this year, is another phase 3 migraine, and then also like a phase 2 anxiety disorder. So like this is one that over like the next month should be very, very busy. I'm probably going to write up a trade idea on this soon. The January options on Biohaven are pricing in about like 14 points or so. In this environment, I'm going to say like that's probably light. If all are positive, all are negative, this probably moves 20, 25. If it's mixed, maybe it's a little bit different, but I think this one has some potential. So keep an eye out. I think this is going to be like a trade write up in the very near future. ITCI. So only a couple more. ITCI FDUFA is the 27th of December, so next week. And you want to talk about crazy. So this is a $13 stock, and the options are pricing in 10 points. So they're pricing in like a 75% move too. So that's what like this FDUFA is like make or break. The January straddle, so the one that goes through that FDUFA, is pricing in 10 points for a $13 stock. So this thing is going to be a huge, huge mover on that FDUFA. I think most people are kind of leaning more bearish on this, just to give you a little bit of a heads up. The positioning's been a little bit more bearish recently. So that's one you might want to keep on your radar. I didn't write it up as a trade idea, but definitely something that could be a pretty big catalyst in the near future. So like next week, the 27th. Nerve, NERV. So this is a small cap bio. They're supposed to have phase 2 depression data. I've read, or I just saw somebody say like could be like 75% upside versus possibly 30% downside. This is supposed to be by the end of the year. Options, I mean, it's a $7.50 stock. Options only pricing in about $2. So options are pricing in 20%. From what I've read, either scenario would exceed that in terms of like a priced in move. So maybe something to keep an eye on, NERV. And then last but not least, APLS. So this is a phase 3 readout that's going to go head to head with the Alexion's main drug, Solaris. So this one, they said very early January. So this might come before we meet next time. So that's why I wanted to highlight it. They're pricing in about 12 points or so. And I would say that those options look pretty light to me. I think if positive, this probably is up 20, and if negative, this is probably down 20. So options are pricing in 12, and I think it probably moves 20 either scenario. So that's probably one to take a look at, and I think I'm probably going to write that up for a trade idea in the near future too. All right. So earnings after this week really going to slow down, but you have like eight reasonably big biotech events still on the radar there. So, I wanted to highlight that because some of those, or actually most of those, should play out before we get together the next time. Okay. Any questions about those? Or just any questions in general? About anything we covered tonight? Doesn't have to be just about those. Okay. Well, I think that's probably a good place to stop. Kind of like an information overload. Just covered a lot in a short period. Um, but yeah, I mean, if you have any questions, so like if something pops in your head, like later tonight during the week, or before we get together the next time, and you want me to, or no, if it's like a question you want me to answer, or if it's like a trade idea you want to bounce off me, or I do those daily videos. I'm always happy to like cover something in like a video, a little bit more longer format. So if you have any questions and you want me to go over something, please don't hesitate to reach out. I'm happy to help however I can. Um, it's really not an inconvenience whatsoever. So I really do appreciate when you reach out. Um, and what else? Yeah. So. Um, like I said, we won't get together until the beginning of January, just based just how like the calendar falls. So I just want I want to say like have a fantastic holiday, and if you guys are traveling, hope you have safe travels, or if you're with your family, and hope you enjoy the time with your friends and your family. Um, it's always like it always kind of slows down a bit, so it's a kind of like a great time to maybe like take a little bit of a break, recharge the batteries, get your focus, elsewhere for a little bit, and then once January rolls around, things really pick up from like a news perspective. So, I feel like the news flow maybe like slows down a bit over the next 2 weeks, but January should be like absolutely jam packed. So there'll be a ton going on. Yeah, thanks, Rob. Appreciate it. Yeah, I mean, um, like I said, like if anything comes up between now and the next time we meet, if you have any questions, please don't hesitate to reach out. All right. So have a fantastic night. Best of luck this week trading. Have a wonderful holiday, and I'll talk to you. I'll talk to you all soon. All right. Take care.